I hope everybody can hear me. Okay. If cannot hear me, organizer, please beat me on the phone itself. All right. Otherwise, I would. Thank you. Okay, I shall go ahead. This would be the introductory screen of Philip for you to scan about their upcoming webinars, about all whatever. If you miss them, don't worry. At the end of it, it will still be available. So I will move on to my next slide, which I would continue to do some introduction on my own by myself, as introduced by Sri. I come from the floor once upon a time called SIMEX, just to clarify a little bit more so that the audience, you know where I'm coming from and you know how our path would be similar. Yeah, if I bring myself all the way to 30 years ago when I was a newbie, I joined this environment, all right, called SIMEX. And this place is not very well understood by many people. There are some of them who are employed people, that means they're employees there. Some people are order fillers. They earn money by filling orders for customers, just like Remisier. But another group called locals like myself, we are not employed, so we have no salary. We do not service customers, so we do not earn commission. So in a very candid manner, we go in with our own savings and try to play this financial market number game. All right, if you get it right, that would be our income. If you get it wrong, then our savings would go down. Yeah, so that's what I've been doing for almost 30 years. Now, this next slide is actually to show my 30 years of experience, because I joined the floor in 1992, and this guy came on board in 1993. And this is a video clip made by Money Mai in 1994. And by 1995, he appeared in the papers and become famous. Okay, now I always introduce myself this way for two reasons. Number one is to prove the timeline of my experience as a floor trader. Number two is actually not to put him down, but to let you know that once upon a time during his presence, he is a very, very good trader. He knows very, very well about the mind game of trader, right? This whole trading is a mind game, and he's able to play his opponent's mind very, very well. The unfortunate thing is, a few years later, he lose out to the risk management part, yeah, which is a big portion that we are going to cover today. All right. So with that introduction, I will also want to let you know that this is another part of a monthly series initiated by SGX, Philip, as well as myself. Yeah, informally, because of some reasons that happened on top of COVID-19. So in a way, I am doing some kind of national service, because I usually will charge a speaker's fee or course fee to run courses as well as webinar, but I'm doing this monthly series for free. Yeah, so there's probably going to be one more next month, and the whole purpose is to get you started trading SiMSCI as soon as possible, right? Why I use the term national service? Because this is our national product, yeah. So I'm doing so. Philip is coming on board, and that will be SGX, our exchange product. So I'll do so by sharing with you all the necessary startup pointers, right? So without going through course or whatever, so just like how I share with the newbies from the floor, if you can pick up those pointers, it would very much help you at least shorten your learning curve, yeah, pointing you to the correct direction to start this journey. So it is done in a very candid sharing manner, telling stories, but if I deliver any concept, I will highlight to you so that it will be as clear as possible, right? So this is actually the 4th month, yeah. We discussed all these things during July. I think I started my first session in August by the title Technical Trading the SiMSCI. So that is when I mentioned quite a bit about the SiMSCI contract specs, yeah, the detail of what it is, and I define what trading is, and specifically I trade with technical analysis, right? So I talk a lot more about that, and I continue to talk about technical analysis throughout, because that is the way I will help you understand the market. Now, the next session, or rather the second session, organizer requested that I talk about scalping. So I actually define what scalping is from the pit, and how scalping without the pit has actually changed, right? So I did a session, my second session, with this scalping as the main theme, also talking about SiMSCI. Now, the next one, which is last month, I personally enjoyed this very much when I highlighted the topic on trading edge, yeah, which is to gain the advantage. Many people feel that the advantage is to get the secret of a trading system. And last month, I actually highlighted to you many areas that you need to gain advantage in order to win in this game, right? Why should you win compared to another fella? So many people are trying to play this game, yeah? So what advantage do you have compared to another person? So I elaborated a lot on this, and I talked about day trading. I also talked a lot about the technicals over last session, yeah? So therefore today, I will not be talking too much about the technicals anymore. And the focus is on money management golden rules, right? Now, incidentally, it falls on the 3rd of November. Now, all these dates have been planned in July. So it was unintended that I deliberately tried to time it so that I talk about the US election, yeah? But anyway, as a trader, we will always be confronted with a lot of events, yeah? So how do we have to deal with all the events, some big, some small? So incidentally, today's main topic should be on money management, but since we are having a big event tonight, we'll put these two together, all right? So with that, this is another model which I have always been showing in my public sessions as well as courses, that to really highlight to all aspiring traders to not exclusively look for the secret over here. Yeah, many people really have the wrong idea that once I get a good system that is advocated by some gurus, by whatever, they can live happily ever after. Now, while a system is important, there are two other areas which is equally, if not more important than the method itself. That is called the mind and the money management. Together, you call it the 3 M's, all right? This would be trading psychology, yeah? You call it mindset, you call it discipline, you call it whatever, but it has to do with the mind. And the other area would be money management, okay? That we will, I would pay a lot more attention. At least half of my tonight's session will be dedicated to talking about money management, all right? So the usual disclaimer required by the authorities, required by all organizers, and instead of the usual way of very boring saying what this is all about, I always use these 4 words, yeah? 2 words is the organizer, the authority want to warn you that what you're about to listen is considered high risk, because I'm talking about trading, I'm talking about futures, I'm talking about derivatives. But I personally always complement these 2 words with my 2 words called high returns, yeah? Actually, whether you know or not, this idea is already an important basic concept of money management, all right? How I elaborate on this would be, some people focus too much on returns, yeah? They're thinking of, oh, how I can make a lot of money. They totally ignore risk, right? That is wrong on one extreme of the spectrum. Whereas there are the other extreme, right? Some people are chicken heart, very gassy, yeah? They focus too much on risk. They dare not lose money, and because of their overly focused on risk, they totally miss the opportunity of making a lot of money. So therefore, what I'm trying to highlight to you is, focus too much on risk is wrong. Focus on return also wrong. You must focus on both and balance them. All right. So I've already introduced the essence of what money management is. Yeah, and we'll continue to talk more about this later on when I come back to the money management topic. All right. Another model I like to explain to you is, to make money in the financial market, I use the analogy of someone trying to make music and enjoy music. All right. In order to do this, yeah, look at the blue color section, you would need at least 2 things, right? First of all, you need to understand music theory. Without music theory, you are not able to compose or even appreciate music to begin with. Now, if you know this, in order to make music, you need good instruments, yeah? So if you have good instrument and you understand music theory, you will be able to produce good music, all right? So in the similar token, to make money in the financial market, you need to understand market behavior, how the market behaves. There's a certain orderly manner whereby the market would repeat itself. Yeah, so it is not exactly straightforward, but at the same time, it is not that difficult to understand. So this is the portion which I have been trying to share with my audiences, my students, and people who come to the floor. I've been teaching them this market theory itself. At the same time, you would need some kind of instruments, right? So shares, warrants, there's so many different kind of instruments, and specifically, we are talking about futures, which is my forte, yeah? The best instrument ever, okay? The best. All right, so the scope would be trading index futures with technical analysis. So this is essentially what I do full time, and therefore this is what I teach and what I share. And of course, the next two topics will be the impact of the US election on the market, yeah, prior to, before, during, as well as after. And then, of course, the various ways to look at money management. All right, so with that introduction, I will start with this first portion first, trading index futures with technical analysis. Now, knowing that I trading as opposed to investing, it is doing short term, so you can do both direction, right? As compared to investing only do single direction, and investing is long term and trading is short term. So we are using a much shorter time in order to achieve a much bigger return compared to investing. All right, so that is the essence of trading. So I do the index instead of individual stocks, because individual stocks involve a lot more fundamentals, microeconomics, which I am no good. Yeah, I'm not saying that it is no good, but I am no good. So when you're no good at something, you must find what you are good at. That is how you define your advantage. So I realized that the index is a basket of stock, so I do not have to go into too much fundamentals, which is my weakness. Yeah, so therefore look at the macroeconomics is something which I find easy. Okay, so therefore, of course, using this wonderful instrument called futures allow me the flexibility to do all these things together, giving me the feature of margin and leverage, so I can use a small capital outlay to gain a big exposure. Yeah, so this is when you will make a lot of money when you're good, but at the same time you're going to lose a lot and very fast if you are no good. So the skill set comes in. All right, now of course, all this I make my trading decision almost entirely based on technical analysis, which I've spent a lot of my previous seminar talking in various aspects. I will not talk too much, but again, for those of you who are joining me the first time, I will still need to cover this to make you understand what we are talking about. All right, so before that, we look at the big picture, every market, to identify trend. Yeah, so instead of talking about fundamentals, the news, is market bullish or bearish, I need the technical guideline to really define to me whether market is supposed to be bullish or bearish, so that we want to follow the direction of the trend and trade in the direction of the trend by using a 200 EMA as well as the Dow theory price action. All right, higher high, higher low, low high, lower low. Now, last session, I also introduced that while 200 is important for us to look at what the funds and the institutions are seeing, they are too slow for individuals. Yeah, so I would personally use a faster moving average. I shared with you my parameter last round as a retail professional. So I brought this in together. Let's quickly revise and see whether you still remember, right? I have always been showing you two contracts, the SiMSCI, yeah, as well as the NASDAQ. For reason that is, if you don't remember, I will repeat for the obvious reasons later on. Now, so as you can see, how NASDAQ started the year taking new high, right? And then it starts to break my personal moving average, yeah, giving you the first warning before ultimately crashing because of COVID-19. After that, Dow theory start to form higher high, higher low, when it eventually during the middle of April resurfaced above both 200 as well as my individual map. It started a bullish trend again. Yeah, so despite whatever bad economy fundamentals you think, the chart is telling me that this market has resumed its uptrend all the way until about here, right? Then if you understand market behavior after moving up, yeah, at the high, if whether to go up or down, it would naturally go into a wild wide sideways range, which is what the Nasdaq is doing now. So I've already defined the two range for you. So it's been doing this whole big sideways, leading to the US presidential election. Yeah, so it is still here, it is still above the 200 EMA. Now let's take a look at the SiMSCI. All right, SiMSCI, same thing, after resisted by the year-end close and the individual moving average, it crashed, yeah, after going down below all the moving averages during the COVID-19. Now, just like everybody else, it recovered from the low, but we did a sideways before trying to go up, and we are, or rather our market is among, I don't track all the index, but for all the index that I track, we are the only one that is so weak such that we cannot touch the 200 EMA. All right, so therefore it did another sideways like a descending triangle before going into back into this sideways band, yeah, for about 3 months before breaking the low side last week. Okay, so this is the picture that SiMSCI is in. So you have to bear in mind, while people ask me, is the market bullish or bearish? I always have to counter them with, answer them with a counter answer. Which market are you referring to? Can you see that looking at Southeast Asia, Thailand, Kuala Lumpur, and Singapore, we are all below the 200 EMA. What is it telling you? It is telling me that the funds are not putting their money into this area of the world. All right. So the rest of the market are all doing above, are staying above and doing very well. Only until last week, right? The sudden weakness last week caused the European market, yeah, the DAX, to plunge below the 200. The Dow Jones come to test the 200, but the rest still has got a lot of room to come down. And if supported by 200, it is still considered bullish. So I want to share this with you to let you know that this is the stage leading towards the US presidential election. All right. Now, this is the big picture. So I want to actually go down to a faster time frame. This is something which I have not covered over the last 3 sessions. I'm going to cover today. So looking to talk about the US event ahead, we need to learn from history with the help of the technical analysis framework, right? So what framework are we talking about? I'm talking about the TY map, which is just now I show you that pair of retail professional, the one which I use. Last round, I applied it on the daily chart, but I'm going to bring you down to intraday time frame, 1 hour chart, all right, 1 hour chart, which is what I use if I am more actively available to trade actively during the day. Now, I'm going to show you a few charts, right? First of all, to show the parameter, this thing actually refers to, I'm taking this from my course notes, yeah? I teach this in the course, but I'm showing it to you. The parameter is 35 versus 55. So I'm using these two parameters as a pair, not a single moving average, but as a pair to give me the range to define fair value. So above it is bullish, below it is bearish. Right now, I'm going to show you a few examples so that you can see that how easy it is to actually identify trend with this simple indicator, yeah, whom I call my trend advisor. Now, this is many years ago already. This is on STI 1 hour. Okay, please remember the time frame, STI 1 hour. So you can see that when the market plunged below the map, all right, it started to trend down. It is telling you below means the advisor is telling me try to stay long, follow the trend. It can trend for one whole month, yeah. And in an example whereby it goes above, right? My trend advisor is trying to tell me, hey, try to stay long. It is bullish. It is above the map. So although there might be some small little noise here and there, but basically it can stay above. It can last one whole month. All right. Now I'm going to show you some recent years examples. This is a typical good textbook example that happened in 2018, when in January the STI 1 hour chart stay above map and give you a bullish market all the way, right? Usually after running so much at the high, if it gives you another push, this is when you have to be careful, yeah? This is about understanding how the market behaves, market theory. Now, when after at the high, it gives you a straight push up and it goes below the map, this is when my advisor is telling me, I now try to short already, yeah, because trend is down. This is when in 2018, if you remember, during February, the market actually plunged, right? Dow Jones plunged 600 points, and it was basically a February of crash, yeah? All right, so all these things are very clear to me when I look at my map advisor on a 1 hour chart. All right, in 2019, same thing. Look at this textbook example in April when the market is holding above map, trending up, yeah? Can you see supported and at the high, do another push up? Can you see? I'm repeating this to you with the same mantra so that you start to understand the market theory and the market behavior. After moving up at the high, give you one straight up, you really have to be careful. And when this fella start to go below map, it started to have a whole downtrend for the month of May, all right, that lasted for at least 1 month, yeah? So that is 1819, and previous years that I show you, it is still working, and I would believe that it will still continue to work because I believe in evergreen indicator. Now, fast forward to this year, 2020, before the COVID crash, right? You can see that over here, the market has actually started to go below map, resisted by map, and started to do lower high, lower low. So anybody who trusts this advisor should not be caught with the COVID plunge. Agree with me so far? Don't agree with me, then you better lock up now already lah. I'm saying this not arrogant, but this is really such a good advisor. All right, so let's continue, yeah, to use this framework. If your eyes are trained already to see how this map on STI 1 hour can help me trade my SiMSCI very, very well. Now, before talking about US event, let's take a look at what happened to history. All right, using the same framework, I'm going to look at two other events that is as watched by the whole world as what we are going to witness tonight. Yeah. Now, this is 4 years ago, Brexit. Whether you remember the Brexit event or not, 2016. All right. So prior to Brexit, actually, what happened? Over here, can you see that the market is below and then it went above, and then this is Brexit, right? Okay, let me help you recall what happened. Yeah. Prior to Brexit, when you read the news, right, they are trying to tell you, hey, if there's really a Brexit, how bad it is going to be. The Eurozone will collapse or whatever. Wow, after we read a deal, I think everybody feels scared. Then after reading, it will create a sentiment that is rather bearish, and it is reflected on the chart. So it was bad, all right? And then over the weekend. Now, usually over the weekend, a lot of things can change, yeah? Either something actually changed or people rested already and then they changed their mind. So over here, over the weekend, what happened? Usual, before the actual event of election, they will do some poll, all right? They go to the street and poll the people, would you vote in or out? Now, the outcome of the poll is, most people say they will not vote out, all right? So the poll result came out over the weekend, make a lot of people feel that, oh, although if there's a Brexit, it's going to be bad, but it will not happen because the polling result reveals that people will not vote out, right? So after that, the market become a little bit more bullish and it gap up and stay optimistically above the map, yeah, until the day of the voting, yeah. As the vote starts to pour in, it starts to shock the world. Everybody sees, and as the counting continues, it's going to be out. So what happened is, throughout the world, all instruments, yeah, is being dumped, all right? So everything is being dumped, so is STI. Now, it's being dumped all the way down here, and especially one particular contract, the Japanese Nikkei 225 futures, is being dumped all the way until it reached limit move. Okay, now limit move would mean that every futures contract would allow a certain maximum move every day compared to the previous day's close. Yeah, so once it reached this maximum percentage move, there will be a trading halt. So that's called a limit move. All right, listen to this carefully. Yeah, I will be repeating this subsequently, but I will say first time now. If there's an event that trigger any futures contract in the world to reach limit move, usually that would signify the low would be about formed already. All right, I will repeat again later, but you remember this. It's about market, understanding market theory. Now, so this move caused the Nikkei 225 to hit limit, and what happened next? The low is about there. People still panic, still don't know what happened, but STI, although it took low for the next 2 days, but it's being bought up, and immediately it went above map, stayed premium, and started its gradual uptrend thereafter. All right, now this one example I want you to remember. And 5 months later, what happened? That is when we have the last US election. All right, so can you see it is also behaving like that? It is below, above, and then this is the actual election day. Now, what happened on that day? Again, let me help you recall what happened. The last round was Trump versus Clinton, right? So the thing is, prior to the election, just about 1 week before election, FBI started to log into Clinton about this email saga. Do you remember? If they have evidence to prove that she's guilty, she can be convicted and be thrown into jail. So everybody is wondering, hey, America, what are you doing? Your potential president candidate, you're doing this to her. So therefore, everybody was actually quite worried, and it is reflected in the market itself, yeah, doing below. But again, what happened? Over the weekend, the FBI came out and said that, okay, there's no more investigation, yeah? We'll drop any charges or whatever. Nothing happened. So with a sigh of relief, the market went back above map, all right? So, and then on the day of the election vote count, yeah, STI actually so optimistic that it get up, all right, with all expectation. Now, I remember that day. My feeling is all deja vu, just like what happened to the Brexit example. When the count started to come in, the whole world is looking at what is happening, yeah, because the vote is suggesting that Trump is leading. and same thing. The whole world, every instrument gets sold, get whacked, all right? And so is STI. And on that day, which contract? S&P futures got sold down until it reached limit, all right? Now, when an event causes a certain market, a futures market to go limit, what does it mean? I said this earlier before. It simply means that be careful, the low is almost formed, all right? Even if it can go lower, it will not be that much lower, yeah? I watched this for 30 years of my trading career. I'm telling you this for free. How well can you remember and benefit in the future depends on you, all right? So I'm telling you this for free. Now, so the market reached limit, and after that, STI turned around. Of course, people are still trying to fathom what would Trump be as a president. Yeah, the future, oh my goodness, there's still a lot of uncertainty. Therefore, STI is fighting around that for about 1 week before eventually staying above and then down theory, taking high and started its uptrend. All right. Now, so this is the second example I want to show you. And with that, yeah, I am actually talking about cause and effect. I have not said this for a long time already. Long time ago, when I was doing education, people used to ask me the difference between fundamental analysis and technical analysis. Yeah, what is the essence between what is the main difference between these two? I am telling them fundamental analysis is cause, yeah, the reason, the why. But are you good at interpreting the cause or not? Are you good at are you timely enough to get all the fundamental reason or not? All right. But what is worse, after interpreting already, the cause keep changing because fundamental news keep pouring in. Yeah. So I am not good at determining the cause. But whatever the cause is, it will lead to an effect that will be shown in the chart. All right. So I focus my attention to study the effect, which is technical analysis. Yeah. So what I've shown you just now, although I can explain to you the reason, but the effect is very clear. All right. So this is what happened all the way until lunchtime. Right. I prepared this until lunchtime because I've got no time to prepare after that. So can you see what happened this 1 month, yeah, leading to this election date? So this 1 month, can you see that STI basically is staying bullish in the beginning of October. In fact, beginning of October is bullish for everyone. Yeah, the world's market is bullish. And why does it suddenly give you some uncertainty over here and lead to a plunge last week, right? Now, of course, this is the effect. The cause I will talk about later, all right? But I can only tell you now, the uncertainty is not about who will win, yeah? Not whether Trump will win or Biden will win. It is because of something else that I will come back to later on. So you just remember, this is what you need to focus because this is happening now, all right? This is the beginning of the month. 2 weeks ago, last week, and today, yeah, we ended somehow higher, all right? This STI. Okay, so with this, I will go on to the next topic. All right. Pardon me when I keep looking up. I'm trying to make sure that I am following my timing properly. Okay, so I will go on to talk about the impact of US election on the market. Yeah, before, during, and after. I need to talk about this combining cause and effect, meaning that I need to talk about fundamentals. I need to talk about technicals. Yeah. Now, when I say I need to talk about fundamentals, I can imagine my students laughing because they all know that I always say I don't know fundamentals. But in this case, I will only talk about my 3 fundamental focus. Yeah. Now, in fact, for the last 3 sessions, if you have been listening to me, I already mentioned this already. Let's recap now. All right. Now, what is the why? Yeah, the cause. Yeah, my 3 fundamental focus is number 1. I have been mentioning Trump is about whether you agree or not. He is about one of the most intelligent US president, if not the most intelligent US president in terms of manipulating the stock market. All right, manipulating in a good way. He knows exactly. He knows market theory. He knows how to bring out good news, bring out bad news to let the market go up orderly in a Dow theory manner, higher high, higher low. All right. If he allows the market to go one straight up, it's going to die. Yeah. So he did it very, very well all the way until his term ends. So that one, I have to give it to him. Okay. Now, so let's take a look at this. All right. I would use NASDAQ. Yeah. You see how Trump actually got elected towards the end of 2016, correct? 2016. 2017 was a very bullish year, right? It's a bullish year that led everybody else to actually go up. Now, ignore this portion first. Ignore this portion, this portion. Can you see that it is essentially doing above 200 EMA and doing a Dow theory, higher high, higher low, very orderly until where we are today, right? Okay, now I still remember, yeah, whenever the market is overheated, he will always tweet, yeah, and do some bad things so that the market, so that no bubble will be built. I still remember during this year, it's all about North Korea, yeah, the rocket man. Wow, they will joke each other, and then wow, bad news, people sell over the weekend. Then after Trump says, no, 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 we are still okay, and then it goes up. So it goes all the way like that. And then, of course, over this period is with China, right? Oh, I'm going to press down on them. And then when things are bad, he will say that, oh, no, President Xi and I are good friends. No, there will still be talk. Now, so all the good things happen during the drop towards the 200 EMA level, whereby these are all good entry level, yeah? Now, however, over here, there are some things that happen starting from, as far as I'm concerned, starting from Malaysian politics in the middle of 2018 that caused the neighbor North and South to plunge, and eventually the whole world went into a very weak close, right? WEAK, a weak close to end 2018. So this is what happened, that something which Trump cannot help it if the general sentiment becomes really bad, right? So this COVID-19 also, there's a plunge that came all the way down and reached this support level and did a V-shaped recovery back up again, yeah? So this is what I mean by Trump is very good at manipulating the market, yeah? All right, second point, which is very important, therefore I highlighted it like that, yeah, is the printing of money. Now, this is something whereby it becomes very, very evident because of the COVID-19. In fact, point 2 and 3 becomes very clear because of what happened this year, COVID-19. Printing money started from the subprime crisis in 2008. At that point in time, some people don't understand. I definitely don't understand. Yeah, you also got printing money, and then you have QE1, QE2, QE3, right? After that, I remember reading some of the some of the professional economy people. They are talking about they're going to get the repercussion, right? You cannot print money from thin air. Eventually, there's going to be a repercussion, and it will cause the whole financial system to collapse. Now, until today, it is still working. I wouldn't deny that one fine day, this whole printing money will get backfire. Yeah, I don't deny that. But until that day comes, market is still going up. So as a trader, we need to follow trend. All right. So therefore, this printing of money eventually works until a lot of other countries also follow suit to print money. All right, how do I explain this printing of money? That has got to do with this important concept called a greater fools theory. Yeah. I mentioned this before in one of my last 3 sessions. It's so important that I will repeat it now. To understand market theory, okay, behavior, you need to embrace this as a trader, especially as a chart trader. When this fella want to buy, or he already bought, holding the long, looking at it, I hope that another fool will take over and push it higher. Yeah. Now, if there's no more fools left, however good the news is, it will not go up. It can only come down, right? So the market can only go up when there are fools to take over. You get my point so far? So therefore, what happened? How can this market at new high break and go so much and go so much? It is all because of the printing money. So the printing money has become the new normal over the last 10 years, that they are the fools. And these are not men on the street fools, that their money are limited. The amount of money printed this year apparently is more than what they have been printing the last 10 years put together. So therefore, can you imagine why the stock market is so detached from the perceived economy, which is supposed to be bad? All right. So therefore, as long as there's printing money, market can still go up. So those people who start to understand this, when they hear about stimulus package, they don't want to miss the boat. They want a slice of the pie. Yeah. So now I'm linking this together with you. The important thing is actually the stimulus package that gives you the greater fool to take over, right? That is the printing money part. All right. The last one. Of course, when they print money, they have to talk about where to go, right? They also need to be smart. Which are the sector that would benefit? All right, I'm not good enough, yeah, to really go down into the detail of isolating sector right down to the individual stock to buy. I already said I'm no good at the microeconomics, so I can only look at the macro, which is the indices, yeah. So therefore, also, is it evident? Is it evident that technology is the new normal. All right. Again, it is so evident to me during COVID-19. Yeah. So when all those tech application companies are supposed to spread out their profit and their growth over the next 2, 3 to 4 years, suddenly the profit is being accelerated uh, and condensed within half a year just because of COVID-19, right? Suddenly everybody need to Zoom. Suddenly everybody need to order food online, yeah, e-commerce online, and suddenly everybody need to watch entertainment at home, right? Netflix. So therefore, this is evidently so. All right. Now, even when the COVID-19 is over, yeah, in case things get better, does it mean that we don't use technology anymore? We will still use. The reliance on technology has been increasing, yeah, with my time from 2G, 3G, 4G, 5G. Now, what next? So therefore, tech sector, not only tech company, yeah, that means those that uses technology application, IT application will continue to benefit, right? Of course, it's a matter of how much more it will go, but it will not crash. As far as I'm concerned, I do not feel that it will go down. So therefore, these 3 points pretty much summarize with this chart, yeah, how Trump manipulated the market very well, and this is NASDAQ, and also understanding greater food theory, and the greater food comes from the printing of money. All right. So with that, I can go back to explain our STI. Yeah. Can you see why STI in the beginning of October it has been rather bullish? This is because everybody, yeah, after the September weakness, they are talking about a stimulus package that is needed for the coming president. Whoever get voted, right? All the analysts out there believe that whether Trump or Biden wins the presidential election, they will need a stimulus package. The only question is more or less, yeah. And the only question is how it is going to spread over which kind of sector. And apparently they cannot agree. Why? Because Trump wanted the money to go into certain area to benefit his votes, yeah. And Biden wanted to get the money into some other areas to benefit his campaign. So therefore, because of that, they cannot pass. So in fact, after the first week of October, Trump actually tweeted, right? Oh, it's not likely to have a stimulus package before the 3rd of November, right? If you remember, he tweeted something like that. Now, but of course, what he tweeted will have an impact on the market. But at the same time, you all know why he changed his mind, right? Today he say yes, tomorrow he say no, tomorrow he say yes, no. So people still are hopeful of a stimulus package until the middle of October. This is when the deadline is approaching near, yeah. So therefore, if you remember, this 2 weeks ago, yeah, the news has been okay. There's hope of a stimulus package. Oh, the discussion is not going through the state law. Okay, there's hope, right? Oh, the state law. So that caused this week of eon, and finally 1 week left. Suddenly, there's no hope already. All right, they are convinced that there will be no stimulus package before the 3rd of November. Now, personally, this is what I feel according to the greater food theory. Yeah. Therefore, because of that, most people leading to the uncertainty, they prefer to reduce their exposure, right? So therefore, the market is actually very sentiment driven. Once this sentiment grips the market, that explains the market last week. Yeah, every day get down. All right, the whole world basically has been weak. Yeah, and until the weekend, right? I already said weekend, a lot of wonders can happen. Suddenly they rested or whatever. They come back, they change their mind. Yeah, they don't want to miss the pie of in case whoever win, there will still be a package. All right. Now, I always use the term fundamental garbage. Yeah. During this last week, do you remember what are some of the news? They always talk about, oh, COVID-19 cases getting very bad, right? Very bad. Hey, this last 2 days, do you think the COVID-19 cases has improved? I don't think so, right? But why? Because when there's no money printed, when there's no stimulus package, when there's no greater food, all the news becomes bad. Yeah. But when there is money, yeah, let me assure you, if over here the stimulus package is out, right? Despite however worse the COVID-19 is, you can see the market going up. Okay. Now, so I have basically this is SiMSCI. Now again, some people ask me, so why? It's obvious already. Do we have any tech component? Do we have? So minimal until it's negligible. Yeah. Our STI component is more than 40% the bank stocks, and the bank stocks is not benefiting from the currently close to zero interest rate. All right, so therefore that explains why after this crash we cannot even go up to 200 EMA, yeah. But again, we can't really go up. Also, we can't really go down, right? We can't really go down that much. Also, we can't really go up that much. So this is what happened to SiMSCI. Okay, so with that, how is my timing so far? All right, I have done the first 2 points. Yeah, let me go to the main point for tonight's topic: money management. All right, this is not really a textbook delivery, but I'm going to give you some, again, very candid pointers that you probably won't hear what I say tonight anywhere else. Yeah, I have about 3 to 4 focal points for you to contemplate. First of all, I want to just repeat this disclaimer and talk about this, right? Now, I want to repeat just in case you didn't get me just now. What is the essence of money management? The money management actually is to refer to you have a proper balance focus, right? Of both risk and reward, yeah? To focus on risk without looking at reward is wrong. You won't make money. To focus on reward but ignoring risk is definitely wrong. You are going to get into crisis. All right, so you need to balance this. So that is the essence of money management. All right, next thing I want to show you is from the floor. I used to educate the newbies that come in, yeah, because most of them come in just like a lot of normal men on the street looking at professional traders. Oh, you'll make money or lose money. They're very binary. They're only thinking of whether you make or you lose money. I started to educate them. All right, while 30% of floor traders, yeah, do not make money, all right, despite the good environment, we still have 30% that suffer losses. 70% of us are making money, yeah. But this article that is published in 1993, very interesting. They actually don't talk about, it reflects the truth by showing you a statistics. They took 300 traders and they show the statistics published in the papers. Now, and they split us into education qualification, right? O-level, A-level, polytechnic holder and university degree holder. And on average, over the third quarter, how much we make individually, yeah, average individual income. All right, so before I come to talk about this, what I'm trying to say is that you can see that it is different, yeah. Over the third quarter, that means over 3 months, right? The average university degree holder make 48,000, right? Compared to 60,000, compared to 174,000, compared to 336,000, yeah. So it's different. So therefore, I used to create this thing, what I call a 1, 2, 3, 4, 5-star trader. And I used to tell the newbies, yeah, all right, who is who? And eventually, what do you want to become? So they say, okay, how do you define this? From which book? Not from book. I define this myself. So you won't find this from any book. Now, anyone who eventually are able to achieve some consistency, all right? If you, on average, can make money every month, yeah, you average it out, but you make all the way up to less than $5,000, I will call you a 1-star trader. All right, 1-star trader. Now, if you are able to make more than 5,000 up to 20,000, yeah, on average every month, all right, I will call you a 2-star trader. 2-star. If you're able to make beyond 20 up to 50,000 within this range, you are a 3-star trader. All right, beyond 50 up to less than $100,000 on average every month, you are a 4-star trader. Only when you can consistently make 6-digit income every month, then you are a 5-star trader. This is my definition. This is my definition. So by definition, a 5-star trader will be making this amount times 12, right? After tax, you still are a millionaire a year. All right. Now, and then one thing, floor traders to us, 1-star trader 是很丢脸的哦。We're not trying to be arrogant. When you come into this industry, if you can start to make money, actually, right, it's very easy to cross over this mark and go into a 2-star range. By general standard, it's very, very achievable once you find the trick of playing this game, yeah? Understanding how to integrate the 3 M's of my method, money management, continue to put in effort, it is very achievable. Now, the next thing is also very achievable to reach a 3-star stage, right? As far as I'm concerned personally, to become a 4 or 5-star trader, that is when I feel that you need that special X factor, right? The X factor, and especially if you can meet a mentor who is a 5-star trader, then you will have the additional advantage if you also have the X factor, right? So I hope this will be something interesting to you, yeah? So not just about, oh, this other tuna, not tuna, whatever. So how to achieve this 5-star? Now, can you see that? Go back to this, yeah? This university degree holder, they make 48,000 in 3 months, right? Which means that every month is about 16,000. So university degree holder on average of 16 month, $16,000 a month, only 2-star leh. Okay, only 2-star. Not today's standard, in 1993 standard. When on the other hand, look at the polytechnic diploma holder, they make 336,000 in the third quarter, right? In 3 months. That means every month 112,000, 6 digits. So this group are in the 5-star category. Get it? So we do have a whole range, right? Now, to be able to make 5-star, to talk about something that you can understand, still remember, this is something which I've been talking about during my last few webinars, yeah? You need a trade plan, and your plan must involve something called DIP, all right? To establish direction, to have exactly how you're going to enter the market, how you exit the market, and how you position size. I've not been talking about this because as long as I do not talk about a trading system and a setup, I will not cover position sizing, yeah? Now, however, position sizing is the area that's going to determine whether you are 1, 2, 3, 4, or 5-star trader. My sniper trader or our sniper teacher in my community always use this phrase. It's all about size. It's all about size. It's all about size. It doesn't matter if you very soon, you catch the low and you run all the way to the high, all right? And you sell at the high. You do one lot. No big deal leh, no big deal leh, huh? Again, we will look at this, say 很丢脸 leh. So it's all about size, right? Now, I'm going to show you with some real example in our community. This is taken from our Facebook. You won't be able to see our closed group Facebook. We have different Facebook. This Facebook belongs to our most popular, most advanced strategy called sniper strategy, right? So the sniper teacher is very strict. She wanted all students to post this thing called POT, proof of trade, yeah, to show that you are actually doing exactly as taught. All right. Now, this example, one day, yeah, when the market traded this setup, so a textbook setup that require you to put in a lot size of 25 lots, yeah. So this trader do according as per textbook, going 25 lots, right? Made 18,000. Real account, ladies and gentlemen, I'm not showing you demo account. All these POT comes with their personal name. So teacher requires them to cut this from their statement and put it there as proof of trade. So actual size 18 lots, right? Over a time span of a few hours. Now, of course, there are some other students because they are new, because they're not confident, because their account is small, right? So therefore, you cannot straightaway jump to the textbook size. So they do only 1/5 the size, yeah? Only 1/5 of the textbook, which is only 5 lots. So instead of making 18,000, you will make 1/5 of 18,000, which is 3,000 plus. All right. So one more example. This next example is a situation whereby textbook setup, you are supposed to do 50 lots. Yeah. So you can see that we have a whole series of POTs. 2 students traded and put in according to textbook example, 50 lots. All right. So therefore, this trade allowed them to make 38,000. This is in USD. This particular contract is USD, US dollar, and they make this again. It's an income within a few hours, right? Now, the rest of the students do not reach that standard yet. They will modify their size lower. So respectively, 8 lots, 5 lots, 4 lots, yeah. So therefore, they are making a fraction of the supposed profits, right? Making only 7,000, 3,000, 3,000 plus, when you're supposed to make 38,000. So can you see, among the community, yeah, it's not only like, oh, how much do you make, but what is your size, right? It's all about size that's going to determine whether you are 1, 2, 3, 4 or a 5-star trader, or even 0-star when you don't make money. All right, so this first portion is what I would like to share with you, that while looking at profit, yeah, what is your goal when you decide to be a trader, when you want to be an investor? Do you have any goals? Do not have something very vague. Oh, I want to make a lot of money, law. How much? Don't know, law. Yeah. So therefore, how do you make sure you do that properly? You have to follow the 2 golden rules. All right. So identify trend and follow trend. Yeah. So of course, the second most important golden rule. Now, some of you hear me until here this already. I always say it's important to cut loss, cut loss, cut loss. Do you understand why now? Because it's all about size. When you want to trade, when you want to make a lot of money, when you want to aim for 3, 4, 5-star, you need to trade size. If not, you will not be able to make that kind of money, right? But when you want to make more money with size. When you're wrong, you will also lose more because your size is big. So therefore, why is it so important to learn how to cut loss? Because if you do not cut loss when you are wrong, remember what happened to Nick Leeson? Yeah, you become famous in the other way. All right. So therefore, some students when they are new, they say, "Oh, teacher, never mind, I'm only doing one lot, right? So I don't have to cut loss." If you do not learn how to cut loss with one lot, you can never cut loss with 5 lots, 25 lots, 50 lots, 100 lots. So please respect this thing, which I call the golden rule of all golden rule. If wrong, cut. All right. Okay, so some people ask me, yeah, teacher, can I make money trading SiMSCI or not? Yeah, like you show all these charts, the SiMSCI, like cannot even go back to touch 200 EMA, it's so bad. Hey, ladies and gentlemen, I am trading, I am not investing. If you talk about investing, I would be telling you, I can see somehow that the world is not interested in this area of Southeast Asia. Yeah, for whatever reason, for the fundamentals which I don't know how to explain, money is not pouring in. But it's the same as those people who can long and short stocks, right? You will need to identify which are the strong shares, and those shares you focus on buying. But those are there are weak shares, yeah. There are weak shares when general sentiment is bearish, you don't want to sell the strong shares. If the general sentiment is bearish, you want to go and sell the weak shares because they will continue to go down even more. So it's actually the same. Yeah, SiMSCI is actually belong to the contract whereby it's very good to sell. Okay, I don't know how SGX would like me to say this, but I'm saying this as a trader. Now, so what I wanted to show you is what income is realistic. Yeah, other than showing you the statistics of 1, 2, 3, 4, 5 star, there is something else which I do as an educator over the last 10 years. Now, I want to poll my audience as well as my students. Those who come to my course, occasionally I do this do this check out, and sometimes I do auditorium seminar. I will also do this check. Right now, this is the range that show your pay as an employee, yeah, whether self-employed or employee. This is your monthly pay. Some people, your monthly pay is like 3,000 or even less. Some 5, 8, 10, 12, 20. Yeah, I have some high flyer. They are CEOs in company. They tell me, oh, way beyond. Yeah, that's beyond $20,000 a month. Their pay. Now, so I would like to take this as the benchmark, right? This as my defined midpoint, yeah, $10,000. So when I poll my audience and students, I start to realize that those who come to attend my seminar and those who come to attend my course, generally, I find out these statistics, right? The statistics is 70% of these people, their last drawn pay, yeah, or their current employed pay is $10,000 and below. 70% of them. Whereas the other 30%, they make 10,000 and more. All right. Now, why do I say this? Because again, back to money management, back to focusing on profits. How much is enough? All right. There's no textbook answer. Yeah. Some people, they match their pay, they're very happy because they only make $3,000. All right. A CEO drawing $50,000 a month, yeah, and then plus bonus $1 million bonus. Now, so when they come to be a trader, how much do you think is enough for them? All right. So the benchmark is their last drawn pay. So therefore, since I'm using this, yeah, $10,000 as the standard guide for most people. Now let's look at the sums. It's very simple. 1 month there are 20 trading days, right? 1 month, 20 trading days. If you have the skill to take $500 out of the market on average, every day $500 on average. Now what would it be? 500 times 20. Can you do a quick mental calculation? That will give you $10,000 income a month. Is that enough? All right. Again, I'm asking this question. Some of you, I can believe that you're nodding your head. You think it's enough, yeah. Some people, wow, so little, right? So it's up to you. However, after you can achieve $500 a day, all right, when you find the trick of playing this game well, all you need to do is do the same thing. You double your size now, right? You double your size. Then you're able to go for $1,000 a day, yeah? $1,000 a day times 20. 1 month, you'll be able to make $20,000. You would be matching the income of most people, most employed people, $20,000. And what is that by our standard? You are still only a 2-star trader. You're not even 3-star yet. But is it good income? Is it good income under the current situation when COVID-19, people lose job, company close out or whatever? Yeah, good or no good? I'll leave it to you, yeah? All right. This is in 2016, yeah? There was one period when I have a student who tell me, I still cannot really fathom how traders make money. So I decided to show, to tabulate a 1-month performance, my 1-month performance, right? Trading SiMSCI, yeah? All right, so this is Monday, Tuesday, Wednesday, Thursday, Friday, right? 1 week. And you are already quite familiar because you know that this is my map. So market broke below the map and started to trend down, right? And when it trend too far away, it will not go down anymore. And we did a rebound on Friday. Yeah, is it quite familiar to what happened to the market last week and these 2 days? Can you see that the market theory is always the same, right? Now, so how did I perform over this 1 week? Monday, Tuesday, Wednesday, Thursday, Friday. So you see sideways market, you see trending market, you see up market, you see down market. Yeah. When you have the skill and you understand market theory, now very likely you are able to make money under all market conditions. Yeah. Although depends on your skill, some maybe not every day, but I will show you printing extract from my trading statement. This is Monday, Tuesday, Wednesday, Thursday, Friday, right? You look at this bottom, this is what I make on the respective days of the week. Yeah, I will show this up here. All right, 1, 2, 3, 4, 5. I would add and tabulate for you, and total is $9,680 for a 1 week's performance. 1 week, yeah. And I will show you some more things. Now, I would also show you the activity that is taken place. On Monday, I did 35 round turn, 35 buy, 35 sell. All right. Tuesday, 26 versus 28. So I carry overnight. Wednesday, Thursday, I did almost 60 round turn, and Friday I didn't do too much. Yeah. Now there are quite a few things that you can also learn from just this slide itself. I'm trying to show you. It doesn't mean that the more you trade, the more you make. Yeah. On Friday I didn't do a lot. I could see that the market is rebounding, so I hold on to some position. I'm still able to make $2,000 on Friday. All right. So that is one thing you can learn. Now next thing, let's talk about money again. Yeah. About money management. So SiMSCI has got a contract value of about $32,000. Yeah, $32,000 is what it is worth. So therefore, when I do 1 buy, 1 sell, my turnover technically is 32,000. So when I do 3 round turns, right, whether at the same time or I separate them, my turnover is 100,000. So when I do 30 round turns, yeah, 30 round turns on this day, my turnover is $1 million. And on Wednesday, Thursday, my turnover is $2 million, right? Because it's 60 round turn. Yeah, can you see? I did $2 million worth of buy sell. What is my commission? I pay $105.50 commission with a $2 million round turn. Why do I always tell people, if you trade shares and you buy sell $2 million worth, you go and do a mental calculation yourself, how much commission do you have to pay? Yeah, it's quite a lot, you know. So therefore, futures, why I say futures is such a wonderful instrument, despite turning over 1 million, 1 million, 2 million, 2 million, and this one negligible, net off my commission, this is how much I make for the week. Yeah, minus off commission, I am still very close to my gross profit. Okay, so therefore, well, I have already shown you, talk about a few things to make you understand a little bit more about this. Yeah, so all right, I also want to help you understand, because from the last few webinars, for some of the letter that wrote to us, we read the letters. We feel that there are many still have the share investors kind of mentality, right? So therefore, the next slide is to make you understand a bit more the difference between share trading and futures trading. This is how I would attempt. Yeah. Now you take a look. Over this period, the SiMSCI closed at 3240, right? Which means that it is worth $32,400. The actual value is $32,400 over here, and it dropped all the way down to 30,000. So it lost 7.5% in a week. It lost 7.5% in a week. Now, so let's take a look. Let's take a look. For people who are familiar with share, $32,000, right? Whether you want to buy or you want to sell, you will look at it 32,000. So the worth is 32,400. If you have $100,000 to invest, yeah, So that is when you will do 3 contracts, correct? Approximately. So 3 times 32 will give you approximately 100,000. So you look for 100,000 and then you want to catch a move, right? Of course, depending on whether your direction is up or down, yeah, to make that move. Now, in this case, if let's say you are correct and you try to short the market because you think direction is down, exposing $100,000, yeah, the market went down 7.5%, that will give you a return of 7,005. In terms of percentage, you do make exactly 7.5%. All right. Now, I have a friend who mentioned recently that he go and try to do an investment course. So many investors are trying to aim for a 5% return, 10% return, 20 or 30% return a year, and they're very happy with 20, 30% return a year. So he said, this trainer promised that I'm going to help you double your investment, meaning that you are able to make 100% in 1 year. All right. Now, to us, it's actually no big deal, traders. But for investor, hey, he hear already like, don't I'm sure no 100%. I want. Yeah, but how do you do that? So this trainer actually broke it down, right? Is it very unachievable? It's actually very easy. 100% divide by 12 months. Yeah. So how much would that be? That would be approximately 8 to 9% per month, right? So if you're able to make 8 to 9% per month, you will be able to make 100% a year. Now, so under current market situation, when it's so volatile, especially with technology stock that can give you a few percentage move either up or down, right? So these people with a fixed method, yeah, they scan all the stocks and they only catch those stocks with the setups, all right? And they try to catch a 8 to 9% move. You need to do this once a month only. Even if you cannot catch it once, you catch 2 stocks add together, you will get 8 to 9% return a month. You do this consistently, you're able to double your money in 1 year. Is it simple enough? Sometimes you just need to break down to have a planning, yeah? This part of money management, to plan the figure such that you can see the goals, all right? So if you can do that, eventually, this is called compounding. Now, although Warren Buffett is actually using a different approach, he's not trading, he's not investing the way I mentioned just now, right? But anyway, he grows his wealth by compounding. Can you see that from 5K, he took 1 year to grow to 6K, yeah? It didn't even double. But from 6K double to 10K, 10K double to 20K, all right? So it's through compounding that today he is worth billions, yeah? But being the richest man in the world, it is very difficult because the world wealth is limited. It's very difficult for him to double his multiple billion already at this stage, yeah, of his life. All right, so therefore, this is what I'm trying to show you now, the important keyword called compounding. Okay, very funny, yeah. Incidentally, my daughter has just graduated, so she started to look into investment, and that day she just asked me, oh, Daddy, do you know that compounding is the 8th wonder of the world, according to Albert Einstein? Yeah, of course. So investors, you want to focus on compounding. All right. Now, coming to traders. What about traders? Yeah, we are not going for percentage return because looking at the same SiMSCI, $32,000, all right, worth, whereby an investor with $100,000, he will want to go in 3 lots, yeah, to get his $100,000 exposure. If we buy 3 lots, we are also gaining $100,000 exposure, right? But we do not use $100,000. Yeah, we will use a margin. The margin required to do 1 contract is 1,005. So if I need to buy 3 contracts, I would need 4,005. So as long as my trading account has got 4,005 or more, I'm able to do 3 lots. All right. And with 4,005 compared to investor using the full $100,000, I can achieve the same result, catching the same move, making $7,500. While using this amount, the percentage gain is 7.5. I'm using this amount. So my percentage gain is already more than 100% return by catching a single move itself. Follow so far, all right? So therefore, this is to let those people who are still investment mentality to basically make you understand, yeah, that we are basing on margin. So therefore, you need the skill, right? Because if you have no skill, without skill, investors to lose the entire amount is very difficult. Yeah, do you know it's very difficult to lose everything, you know? All right, if you have no skill, it's very easy to lose $4,500 because the market moved against you by 7.5%. It's already down 7,005, and you only have this capital outlay. So that is how people without skill trade futures, lose everything and beyond, and they make one conclusion. They go around and tell everybody futures is dangerous. Yeah, I wonder why they don't go and tell people, oh, I'm no good, right? They're very unfair to this product and this instrument. Okay, so therefore now let me come to this point. A few years ago, I have someone ask me a question, quite interesting. He said, Tom, if I were to ask you to exclusively just tell me something about money management to impress me, yeah, what would it be? Don't touch on mine, don't touch on method, just on this. Okay, I can recall something that I come across more than 10 years ago by another presenter talking about money management. I like this very much. So straight away, I can think of what to present to him. Now, this guy shared by saying this. If you have got no method, zero, no selection criteria, no advantage in methodology, okay? This one just listen, you're willing to follow rule. If you're willing to just simply follow a money management rule, which is what? Which is you buy a stock. If you go against you by 30 cents, you just cut loss. No question asked, close your eyes, don't care about whatever happened, just cut loss. If it doesn't hit your stop loss, you write this to a $1 profit, yeah? And do not try to hope for more and you take profit. So basically the simple money management rule is wrong, 30 cents, get out. Correct, right until $1, also get out, all right? So you, without selection criteria, randomly choose 10 stocks, okay? 10 stocks, yeah? So this will be 10 stocks, and you put your orders accordingly. All right. Now, assuming random selection and under random market environment, this is the outcome. You have 1, 2, 3, 4, 5, 6, 7 reach the 30 cents and trigger your exit. So you lose 30 cents. But these three did not reach your 30 cent stop loss and move the other way and give you your $1 profit. All right. So what happened? Yeah. The outcome is you make 3 times $1 and you lose 7 times 30 cents. So what is the effect? $3 minus 210, your outcome is a positive 90 cents. Now, I'm simplifying this. I did not include commission or operating costs, right? So just on this itself, you do have a positive expectancy. Can you see? Without selection criteria, right? Just simple money management rule. That is called defining a risk and reward of about more than 3R, yeah? $1 versus 30 cents stop loss. All right, if let's say you improve yourself, improve what? To improve your selection criteria by a little bit, yeah? For example, you've attended my last 3 sessions, you learn about trend. If the trend is up, you only buy. If the trend is down, you only sell. And you select stocks that are in accordance with the trend, right? Now, still is probability. You will not make all. If because of that, you increase the performance to making 2 more, you make 5 and you lose 5 with the same risk reward ratio. What is the outcome now? You make $5, you lose 150. Your net compared to previous one, 90 cents, now is 350. Do you see the difference? If you improve even more such that your selection criteria has honed to certain position, still not 100%, if you can make 7 and lose 3, all right, look at the difference. When you can reach this stage, you are already a consistent trader taking consistent money out of the market. Don't try to aim for perfection. Aim for excellency by following steps, but not perfection. Perfection means you try to make 10 trades, yeah? Don't have losing trade. Don't try to aim for that. All right, so with this simple example, actually, I'm bringing you to the next one. Now, don't get wrong, don't go back and make a conclusion that, oh, therefore, risk reward ratio is important. There are 2 ratios. One is called risk reward ratio, right? Your profit amount versus your loss amount, the ratio. The other one is called win-lose ratio, right? Which is, do you win more and lose less, or do you win less and lose more? Some people, for some reason, they have the knack to be able to win more than they lose. If you are able to win more than you lose, you actually don't have to go for a very good risk reward ratio. Yeah, you want, of course, good. All right, of course, taking profit faster is easier than riding further. Yeah, but once you have a good win-lose ratio, you need to go for smaller profit. Right, your risk reward ratio can be smaller. You aim for size, and that is how you can make a lot of money. And that is exactly what my sniper trader is doing, because her win-lose ratio is very good, yeah. And therefore, she doesn't go for very excellent risk-reward ratio, but she go for 5, and this is what she teach our students in our advanced course. So therefore, this formula, now this happened to be I teach my daughter in university when she was doing maths, yeah. Very embarrassing, go university, still want me to teach her maths. Okay, anyway, I have seen this before during my own study, but when she was doing quantitative reasoning, right, I saw this, and now I'm seeing this, yeah, from a trader's perspective. All right, so they call it average value, or they call it expected value or mean value. Basically is to see that you need to have all these exclusive event, yeah, the probability of A1, A2, A3 happening times the value when it happens. So this would give you your expected value, right? So if after computing this, you have a positive expectancy, that is when you will be making money. So you have a negative expectancy, that is when you are losing money, yeah. So this is something which we will advise our students to do, to do some documentation. So through this, you were able to find out a lot about your trading methodology as well as yourself. Okay, so therefore, to summarize, these two parts called risk reward ratio and win-lose ratio that you will need to establish and determine for the style that you're going to trade. Yeah. All right. So therefore, how to get how do we improve our choice? Now, again, technical analysis, right? I showed this during one of my last session, that the insiders can choose not to tell you what they know, but they can never hide from you what they do, because the footprints of the bulls and bears are all reflected and reviewed in the chart to the trained eye. Yeah. So therefore, the chart is my map, all right, and the choice of indicators is the compass. So the perfect example, yeah, would be this. Now, I'm talking about my sniper strategy, not in detail though. So, whether you remember, 2 months ago, we have another shot, right? When Abe suddenly resigned, and caused the Nikkei 225 to plunge, right? Can you see, after plunging, usually, bodaji, yeah, this is what happened. Now, so in our Facebook, my sniper actually posted this. Before he made the announcement, what do you see from the chart that's asking you to short? So assuming you have learned a certain strategy, yeah, understanding the market, now this immediately is being responded by our student, yeah. So you're supposed to short and then followed by the plunge. And what else can you do, right? Plunge down to 423. What is the next 1 or 2 action that you can add on? All the sniper trained are supposed to answer, yeah. Oh, take this action plus another 8 more replies immediately to show that, okay, teacher, we are attentive, we know what to do, yeah. All right, this is the textbook example of if you follow exactly what can trading bring you. There is already selling, yeah, to begin with. So you're able to make 14,000 for this trade, 6,000 for this move. After the plunge, there's no signal here, unfortunately, but you're able to make another 8,000 here. And this is the part that you're able to get in here to make $92,000. And when this is over, when this is being posted, this move is not over yet. We're supposed to hold the position until it breaks the low or it reaches the next target over here. Now, can you see? 92 plus 8 plus 6 plus 14, we are talking about more than $100,000 in the span of a few hours. All right. So we are not talking about making 6 digit over 1 month. You can make 6 digit over a few hours if you have the skill. If you have the skill to go to the 5-star category, it's all about size, yeah, and the strategy that you are aware. All right. So now this would be an example of documentation prepared by one sniper student, not the teacher, the student. He is one of those who actually got the Jinghua from the teacher already. Yeah, the teacher wanted him to document this and submit to the teacher. Now, every month he did it. I show you one with the least profit. This is during January this year, before all the volatility that let you make even more money. Now, during January, he traded 3 contracts with multiple strategy. Can you see a lot of red color? All this red color refers to losses, which means that there will be losing trade. But once you cut loss, your losses are contained, right? And when you make a lot more. So the profit for this month is 99,000 USD. 99,000 USD. Our student has already gone into the 5-star category. All right. These are real trade with real account. Okay, so now I have left with the remaining part, where I'll go into the summary. Yeah, tonight let's recap. Yeah, I do this full time, trading technical analysis with TA, and I'm sharing and teaching you in all of my webinars as well as course. And today I happen to talk about the US election, but we are focusing on money management. With or without US election is actually an important component of your approach, yeah, for trading. So therefore, come back to this. This is what happened right prior to tonight, yeah. So the people have been bullish because of stimulus package, as far as I'm concerned, and that is not passing. So unsure, and then people give up, right? And this was the sentiment last week, and suddenly people are still trying to jump onto the bandwagon, leading to the election outcome tonight. As far as I'm concerned, I think there will be no certainty tonight. Because of all these mail-in delay and counting or whatever, unlike the previous year, the outcome might drag. So uncertainty might drag, yeah? The only certainty why people are so bullish, just the euphoric of an event, plus actually one more genuine reason is the stimulus package. Whoever wins the election, they believe that eventually there will be a stimulus package that will give you greater fool to support the market and bring it to perhaps new high. So if you don't want to miss the pie, stand by for that. But short-term uncertainty, yeah, embrace for surprises. Now, I've shown you in 2016 how the Brexit caused surprise, how the last election caused surprise until market reached limit down. Limit down is like 10%, 10%. So unless you are an investor, okay, I'm going to put in 100,000. So since Tom said that eventually it's going to go up, I will endure, yeah. I will just weather all those down move eventually to catch a pie of the stimulus package, right? But if you are doing trading, if you are doing size with margin, you cannot afford a 1% or 2% down, not to mention about a little bit down. Follow so far? All right. So what I have to say is, if you're expecting me to give you details, oh, so Tom, who do you think will win? Ladies and gentlemen, it's not important who will win. It's not important whether I get it right or wrong. It is important, whatever the outcome, you must be prepared for whatever the market is going to behave. All right. I'm going to get in, I'm not going to get in, and how you're going to get in, how you're going to get out. Now, my preferred outcome is what? I don't care who wins. My preferred outcome is there's something that shocked the market and give me a limit move. Still remember the mantra? Once the market has a limit move, what does it mean? If you can't remember, you are undeserving audience. Once a limit move happens, the low is very likely formed already. That time, I will have all the confidence to focus on buying, all right, and to make that move up, yeah. But of course, it doesn't mean that there will be a limit move, okay. So therefore, how can I help you prepare? Yeah. Now, I didn't talk about this today, but those who were with me last 1 or 2 sessions, we talk about pivots. Yeah. These are the slides last session. I teach you how to prepare pivots and go for weekly pivots. Yeah. Now, this is an example which I showed you last session. How a trending market would run below pivot, go for S1, S2, S3. After this run is over, when the market is not bearish anymore, it will bounce back to the fair value. And if the market is non-trending, it will stick on to this fair value with volatility. From below go up, from above come out, from below go up, from above come down, right? This happened to be what I showed you last session. Now, are we having something similar this round? Can you see that if I use the WPP together with just now I asked you to plant the TY map onto hourly chart, I have 2 excellent advisors that is giving me very good idea of a trend. See how in the beginning of the month, right? Both advisors are telling me trend is up, trend is up, trend is up. Until the middle, right, when it's not certain, but it is typically, although not certain, right, it is slightly more on the bearish side. Until last week, plunged all the way down, right? Went through S1, went through S2, went through S3, just like this, yeah? But if this sentiment is over and changed already, what happened? The market snapped back to fair value, and if it's not trending, it keeps fighting back to and forth fair value, yeah? So I'm preparing you. The fair value is here, Today, we have gone above. So if there's no follow-through trend, with all the uncertainty of, if you are worried about Trump continuing office, I think the world should be worried about Trump out of office. I think if Trump wins, right, there's more certainty. If Trump loses, I think there's going to be more chaos. All right. Now that would give a lot of people. Take note of the fair value. That is the time when it will not be able to run too far away from fair value. So what do? You look at the value of SiMSCI. You look at the R1, R2, S1, S2 level, right? Measure the potential of move. Measure how you want to get in, how you get out. What kind of risk-reward ratio are you able to garner? All right. So this is the advice that I'm going to give. I don't know whether this is what you expect. Yeah. This is STI. This is SiMSCI. All right. So it's about the same thing. Now, this next advice. What should investors do? Investors have already given you the long-term 3 fundamentals that will not change overnight. All right. So you do whatever you want to do. Yeah. Anyway, I'm not targeting investor. Existing traders, what must you do? All right, you're already existing trader. I've helped you as much as I can by giving you my technical perspective, the money management perspective, and then also by giving you a few scenario, yeah, plus money management focus. Now, newbies stay out. When you are new, don't try to be too excited. Wow, this election, how can I benefit from it? You don't even understand the basic BMT, right? Don't participate. But follow closely what happened based on what you understand from me and see how it behaves. There'll be a lot of chances moving forward for you to make money. The market is always there. Yeah, we will eventually die, but after you die, the market is still there. So don't worry about missing. Newbies, stay out, but you ought to take action. You ought to take action and somehow start doing. All right. So to summarize, what are the money management things that I've given you? How many stars do you aspire to be? You need to have a goal. Don't simply, I want to make money, but you have no goals. All right. Now, it's all about size. Correct? Therefore, golden rules is important for leverage products. Learn how to cut loss when you are new. When you do one lot, learn how to cut loss so that when you eventually increase size, cutting loss becomes a natural reaction for you. Yeah. Now, try to do a batch of 10 trades and log in to look at the risk-reward ratio, win-lose ratio, check your profit expectancy, and review your trades to find out more about yourself. Don't go into micro trade management. Every trade, yeah, I win, I lose. Get a batch of 10, okay? Do your review, get another batch of 10, and keep doing that. You will surely improve, okay? And that is what we mean by doing trading journal that we make our advanced students do. All right, so finally, I'm almost done. This is the series of monthly webinar. I'm doing my 4th one. Yeah, I'll be doing probably my 5th one. I don't know whether it's going to be the last one next month. So this whole purpose is to get you started with trading SiMSCI as soon as possible, to share with you the necessary startup points. All right. Now, why SiMSCI? Because of all these reasons. Yeah, most important to do national surveys to support our product. Of course, if you want to become a 5-star, I must say that SiMSCI not so easy lah, but if you're quite happy to be a 2-star trader, to match your take-home pay, or even go to the 3-star category, it is still possible, right? I am doing it already, yeah. So it's possible to achieve 2-3-star status by doing SiMSCI itself. All right, so this is also something in my past webinar, how to start and how to fine-tune this journey, whether you have started or whether you want to fine-tune, right? I used to tell you, okay, open account with broker or whatever, but I have an excellent news for you today. Excellent news. Some people who are aware that I'm doing courses, they've been asking me, Tom, where is your next course? Yeah. Before the COVID-19, I used to conduct classroom course, and my course will usually follow up with some mentorship program in the physical class. Okay. So the COVID-19 put everything to a stop, plus some of the changes that took place in the exchange. I have not started. So I've been doing webinars, but people have been asking me, Tom, where's the course? Where's the course? Where's the course? So what's the excellent news? My course is finally quite ready. Okay, now why quite ready is excellent news? Because over the last few months, why have I not been doing it? Because SGX has been putting up my course to funding availability. So as of last week, yeah, the news is still fresh from the oven. It has been approved. So you are able to get 95% funding to attend my course. My course is priced at $2,000. All right. So you'll be funded 95% paid by the government. You need only to pay 5%, which is $100. For $100, you can come for my full training program that come together with some mentorship sessions, yeah, all online. Okay. However, the exact details are still not finalized. So I'll be meeting SGX either this week or next week to finalize. Very likely, we will run the course before the year end, which earliest end November, but very likely will be in December, right? So if you wish to find out more, you don't want to miss this, I suggest you write to me, write to us, so that when the details are out, I would give you more details on the course itself and how you can participate, how you can sign up, yeah, the exact details, right? So do take note of this email. Wait, I'm blocking myself. tyfuturestraining@gmail.com, okay, for us to keep in touch with you. All right, so my next event for Philip will be on the 1st December, also on a Tuesday. And now I am almost there. Let's do a quick Q&A. I only have about 2 minutes left. Sorry, organizer. Okay, organizer, please take over for the Q&A.
All right, thank you so much, Tong Yuen. Okay, we have a few questions here. The first one is from Mr. Ramesh. His question is, Tom, do you practice scaling in and scaling out?
Do I practice scaling in?
Yeah, in terms of lot sizes in and out.
Yes, I do. And in fact, to share with you, because my background, I'm from the floor. From the floor, we do a lot of discretionary trading. Yeah. After I started teaching, I realized that a lot of people not street smart enough to do discretion trading. So, but my experience is discretion. So I'm trying to get some sort of textbook set up to fit into this portion on execution. Yeah. So I'm still teaching people how to establish direction, which is a big important part to get the direction right. And then the setup would be how you do it exactly. But our advanced course, our sniper trader would give you precise entry exit, but also do a bit of scaling in and out, but not too discretionary and not too much. Anyway, I do not know why you asked this question. It is not really important, whether the method involves scaling in or out. It's very much at the end of the day, what works for you.
All right, the next question is one about your course. Is the course suitable for newbie with zero or low knowledge in trading so far?
Yes, for the last 10 years I do for SGX, is designed and catered for people with zero knowledge. But you do have to be really very attentive, yeah, and listen to everything. Now, I will describe everything assuming you have zero knowledge, but it will not be a beginner's class, right? It will still be rather fast-paced. But at the end of every module, I will do an important summary of the pointers that's been taught. So, and people with normal average IQ can follow.
All right, the next question is, in terms of time frames, what kind of time frames would you recommend for intraday trading, or what kind of time frames do you use,
Tom? I use higher time frame for analysis, right? I want to have the big picture. Everything done already. Intraday, I will look at 2 time frame. I'll look at hourly, and we'll look at we call it tick chart. Okay, if you do have tick chart, then you can be something like between 1 to 5 minutes, very, very small time frame. Again, it depends on your skill set, how reactive you are. Yeah. If you don't know what to do, you start to explore 1 hour and 5 minutes. Look at it together. If you have no time to explore, just look at 1 hour. That would be my advice.
All right, thank you so much, Tong Yuen. We have a few more questions, but I'm really sorry. I don't think we have time for today to go through them. We'll send you questions to the speaker after the session, and we'll also have this session available on a YouTube recording as well. So do look out for a follow-up email. We'll have details of how you can view the recording, as well as probably address your queries offline as well. And thank you for being a wonderful audience. Do look out for our upcoming webinars with Tom Yuen. Details we send you real soon. Thank you and have a good night. Thank you so much, Tom.
All right. Thank you very much. Take care of the election. Bye-bye.
Yes, of course. Thank you, Tom. Bye-bye.